Hey everybody, morning. How's it going? Thanks, John, for jumping back in, renewing your subscription. I appreciate that. And welcome everybody to the show. Got my white monster this morning, the fabled white monster. Hopefully the show won't crash like it did yesterday. I rebooted everything, so hopefully that set it up so it won't take a crap everywhere. And forgot to turn my headphones on, I guess. Getting alerts coming through. All right, welcome to the show. Make sure you're subscribed if you're brand new here. And I guess without further ado, let's try to jump into the topic of the day: Nvidia earnings. And we'll jump into the chart here in a minute, but let's kind of talk about a little bit of the set the stage. Maybe you're new here. Maybe you haven't paid attention. Maybe Nvidia is a whole new thing for you. They make GPUs. That's graphical processing units. And, you know, here we are. I like to break down the topics. I like to keep you informed. And there's some good, there's some bad. And Nvidia is the top dog in the country right now, the biggest company there is, according to market cap, and they're set for perfection. So if they stumble at all, we have risks. So after the bell, we have Nvidia's earnings today. Maybe, they're sitting there just below their all-time high. They're possibly holding up the entire stock market with its leather-jacketed CEO's sheer willpower, and we'll see what happens when they report earnings today. But before we get to all that, the beautiful, terrifying paradox that we're staring down here, the market has already priced in that perfection, as I mentioned, and plus a little gravy. They're really expecting this thing to just, if this AI revolution is happening and Nvidia GPUs are the way it's happening, everybody should have one, right? How many GPUs have you bought, right? We all know that they go to the data centers, though. Wall Street is expecting a 68% pop in revenue. 68%. That increases their revenue for the quarter to $66 billion in one quarter, 3 months. Holy moly. It's $22 billion a month. We're not talking about typo here. I'm not misspeaking. 66 billion. They're expecting Nvidia to have made more money in 3 months than some of the countries out there have a GDP for an entire year. That's crazy. And prediction markets, like Polymarket Call Sheet, they're giving it a 93% chance that Nvidia is going to beat these already insane expectations. 93% chance of a beat. On top of 66 billion, which is a 68% increase in revenue. This, my friends, is the problem. The law of big numbers. Where are all these new customers coming from? Where is all this new revenue coming from? The problem with all of this is the same markets that have all this hype on it are only giving Nvidia a 25% chance that the stock is actually going to pop and go higher after this announcement. So we're thinking they're going to have all-time record high big numbers, but the same markets here are giving it a 25% chance of actually going higher, 75% chance that we're going to go lower. You could possibly win and still lose in this game. Welcome to the casino, my friends. This is how it gets super interesting, right? The house always wins. And right now, the house is a guy named Jensen trying to take everybody's money. And this isn't just about one company's stock. This isn't just about Nvidia. This is about the entire AI narrative here. The hyperscalers, that's Google, Amazon, Meta, Microsoft. I mean, combined, they're projected to spend about $700 billion on AI infrastructure this year. That's a veritable fire hose of money. And for the last 2 years, everybody's had to buy Nvidia GPUs. Everybody's had to buy Nvidia's shovels in this digital gold rush of AI. The problem is, there's not really anybody out there that's not aware of this. Everybody knows it. The stock is up 46% last year, making it the most valuable company on the planet. It's priced for perfection, God-tier price performance, no hiccups. Anything less than an absolute miracle in their numbers is going to be seen as failure. And the cracks are showing. I mean, remember back in August, Nvidia posted a monster quarter, but data center revenue only was up 56%. The stock took a nosedive. It missed on the whisper number. There was the prediction number that was public, but the whisper number that was out there, earnings whispers, they missed the whisper number. And this is the level of insanity that we're dealing with right here. Price for perfection, the biggest company on the land, the law of big numbers. And it's not about being good. It's about being impossibly, unbelievably, reality-bendingly perfect and beating that to go higher. So where are all the investment angles in this mess right here? How do we play a game that seems rigged from the start? This is where you kind of start getting creative with it if you want to get into this mess in the first place. And that's where we become the monsters of the market. See, first off, let's talk about direct winners. Now, if you believe that Jensen can pull a rabbit out of his leather jacket or his hat, if he's wearing one, I mean, the stock could actually pop. Then, obviously, Nvidia is the play, or NVDL, or one of the leverage tickers. But let's look at the ecosystem surrounding Nvidia. A company called CoreWeave is specialized cloud provider out there. They're basically all in on these Nvidia GPUs. Nvidia soars, they probably will too. They're the pilot fish to Nvidia's shark. I mean, they're kind of hosting some of Nvidia's cloud infrastructure. Some of these models that they're renting to people to use. But what if the stock sells off on the news? Even on a beat. This is where it really gets interesting. You could have indirect winners. All this AI infrastructure needs power. A lot of power. Data centers, they're the new factories of the AI age. And they're energy hogs. That's where companies like Constellation Energy and CEG, Charlie Echo Golf, and Vistra come in. VST, Victor Sierra Tango. They're the ones that provide the juice to run these AI factories. As long as the AI arms race is going to continue, they win, regardless of what Nvidia's stock is doing in the short term. Another play here is Equinix. Their ticker, EQIX, Echo, Quebec, India, X-Ray. It's a real estate investment trust, a REIT, that owns and operates data centers. They're kind of a landlord of the AI revolution, at least for part of it. Now, there are contrarian plays that you could pick up. And, this whole earnings season has kind of been about a little bit of getting nervous about the amount of money that's being spent to build out these data centers, the CapEx, the capital expenditures. So if the hyperscalers are getting tired of playing this game and buying from Nvidia, paying that Nvidia tax, what do? Where do they go? I mean, Amazon's actually building its own Trainium 2 chips to run AI inference on. Google already has TPUs, and they've been offering to sell them to people. And that was a big surprise for the market for a few weeks. And then just today, or yesterday, I guess it was, we saw AMD jumping 8% because they announced a massive deal with Meta. Meta has decided they're going to buy AMD chips. That's a direct shot across Nvidia's bow. If you think that the market is starting to hedge bets in this arena, AMD, they've always been right behind designing chips to take over. I mean, for years, I've mentioned that AMD is the one, like you may buy Nvidia GPUs, but when you need to put out a bunch of chips to run PlayStations or Tesla cars or other things like that, you buy AMD chips because they're cheaper. It's a contrarian play. Now, another one out here in the weeds, Broadcom. Their ticker AVGO. They're the king of designing custom silicon. They help companies like Google build their own chips. They're a design powerhouse. They're the arms dealer to the rebels. And then you have losers in this whole arena. And we've had the SaaS apocalypse, which is software as a service apocalypse, going on for a couple weeks. And companies like Workday, WDAY, and DocuSign have just been punched in the face because AI has been threatening to automate the entire business model. If AI spending continues to accelerate, these companies that are out there, that they could get left behind if they don't jump on board in a serious way. So the framework for the earnings after the market today, don't just watch the headline numbers. Watch the guidance. Watch the gossip. Watch the gross margins. There's like 14 different numbers that actually come out in earnings, even though we only focus on 2, earnings and revenue. Watch out for mention of the Vera Rubin GPU. Watch out for mention of bumping off the next consumer release until 2027. And they were looking at releasing the next line of consumer GPUs, but due to memory shortages, they may have to bump that out to 2027. Plus, consumer GPUs aren't really running that far behind. But this next generation chip, this Vera Rubin GPU, is supposed to keep the party going. It's supposed to take this thing, crank the party up to 11. And most importantly, watch the reaction, because in this market, the truth doesn't really matter as much as the narrative. And right now, the narrative is that Nvidia is the king dog and it's perfect, and perfection can be a very, very dangerous game to be involved in. So let's look at some charts and see what the expected move might actually be. Jump in, check it out. Before we do all that though, welcome to the show, everybody. Alt trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. I make some predictions. Sometimes they come true, sometimes they don't. I get lucky a lot though. And this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade those things, you'll probably lose money. That's what the statistics say anyway. So be careful out there. If you want somebody to tell you what buttons to push, there's people you can hire for that, but I think you can do better for yourself if you just take a vested interest in learning this stuff. Watching out for number one. Watch out for number one. We'll get to the calendar. We'll get to the Nvidia in just a moment. We haven't checked out the calendar in almost a month, and there's a good reason for it. There's not really much been happening here. It's just pretty devoid. Friday, we get some core PPI numbers. They really messed up like how all these numbers come out with the government shutdowns, and it's become such a weird, wild, wonderful world, I guess. Anyway, Nvidia, as the market opens up here. Let's grab a platform, get some live numbers on this sucker. Let's see what we got here. So the way to tell, you jump out to earnings, which is today. Now, even though it has 3 times a week expirations, one of the new caveats or rules around that was that we would not have an earnings day OPEX. So there won't be an option expiration on a company that reports earnings on the day they report earnings. So even though today is Wednesday, and with Monday, Wednesday, Friday options, you would expect there to be a Wednesday expiration. You know, proof in the pudding, if we go to look at Amazon, they have an expiration today, right? They have a 0 day. But Nvidia does not. And that's because earnings is today. So the next day we have is Friday. You roll in here. You grab the at the monies. Now the at the money, you know, right at 195. That's where the orange line is across the chart. This is Tasty Trade if you've never seen it before. You sell both sides. You sell the call, you sell the put. You come up with a number right around 1150. That's the expected move that the options market makers are pricing in. It's $11.45 higher, $11.45 lower, and that's the range. Pop or drop. That's basically like a $23 range. So $11 down, $11 up, that's the range to play in. Looks something about like this. Yeah, roughly. Possibly be down, possibly be up. And this can shift around all day. Like if this goes ripping off, stays priced at 11, this whole red box just shifts with the price. All right, that's the expected place to end up by Friday. And this works all options expirations, all companies, it's the way to figure it out. It's kind of a trick. Like you want to know where the market's pricing in by March 20th. You just come in here, sell both sides, right at the money, $20 up, $20 down, so $40 range. That's what the market makers are pricing in. It's a simple little hack. Is it perfect? No. But it's easy. Super easy to do. Get a number. And so if you're playing something like a credit spread and you're trying to stay out of the expected move, you should play outside of this range at the minimum. Now, the options pricing is suggesting a $15 move for 1 standard deviation. 1 standard deviation up, 1 standard deviation down. So the range for 1 standard deviation kind of down to 180, possibly up to 210. It's a little bit bigger range, like a $30 range. 2 standard deviations, which covers 95%. So 95% of the earnings reactions should stay inside 165 on the downside and 225 on the upside. Getting to be a little bit bigger, but it covers 95%. At least 5% that can still go popping out or breaking down. Another interesting thing that I see in here is that the puts are priced a little bit higher. Seeing a little bit higher premium on the puts than we are on the calls. It's not quite balanced. There's a little bit of downside skew, and that comes back to the betting markets are actually betting 75% of a drop, only 25% of a pop. The options market's kind of indicating the same sort of thing, pricing in a potential drop, not so much just ripping off the new all-time highs. Should be up above 220 area. It's pretty low on the premium up there. Versus the drop, it's pretty rich down here. So, what do I really expect? We have this bullish pattern. We made a high right back here. Made a low right back here. Kicked off the pattern right here. Churned in here a few days. The target is actually right up here, 197.50. Possibly up to 200. Right there. Now, if we actually get in there today, we're really close right there at 195. It's right at the, That's 195 is right at the resistance we've had since basically Thanksgiving, a little bit before. Haven't really been able to poke through 195 for a long time. So right there at this resistance, if we pop up and hit that, it could be all she wrote, and she could actually drop. Now, support is this orange line right here. I call it the roadmap line. If you're not familiar with it, go watch the video pinned to my homepage that plays. It kind of breaks it down for you, gives you the code for it. And if you're just like, JT, man, I don't want to watch a video and try to figure out code and put that in myself, that's cool too. Like, links in the description. For $5, you can just get an easy button that puts it on your chart, and then with that comes some training and stuff like that on how to use it, a little more refined. But if you just want to get it for free, watch the homepage of the channel. So that's a support right there. And if we get below that support that's been holding since back here at Thanksgiving, we try to break higher, and then we flushed down, and we found some support. All of that chaos in Thanksgiving, and we've just kind of been hanging in the range ever since. But if we break down below that, we'll probably come down here to 150 area to find some support. Why 150? If you're new here and you haven't heard me talk about this, I talk about it pretty much every day. But if you're new here, maybe you haven't heard this. These highs right here from Thanksgiving a year ago, not the one we just had, but the one before that, and Christmas, the one before that, you know, 2 back, we had these highs right here. And then we broke out of it here last summer. We broke out above those highs. So if we fail, price fails down below that support at the roadmap line, probably take a spill down here in the 150 area and visit that. That may or may not happen by Friday, but I have this theory that I have this kind of working theory that based on this chop in here and the fact it's priced for just absolute perfection, and it's easy to disappoint perfection, we may pop that small technical pattern with the high and the low, hit that target, and retrace, fail below the supports, and come down and test this right here. That would be a 1, 2, 3 ABC type correction. Absolutely beautiful correction. And look where the perfect place to find that support is, right there. Beautiful. Absolutely beautiful correction. That would be where the first move down here is basically the same size as this move down over here. That would be a echo in the market, balance on the correction. And if we do that and hold and turn back higher, break back through the roadmap line, probably going up to new highs. Finish this 7-month correction of choppy sideways action with a nice little flush and then breakout. That's what it looks like. Now, if this doesn't hold right here, this doesn't hold, 120 is the next level down right in here. All right. It's just based on the price action, not about anything else. We got a big flush before, and we took off. Wouldn't surprise me to see another big flush yet again. And then it sets the stage to take off again. So, there you go. Yeah, man, they're out of stock of red ones. You know? Joking about the red monsters. They didn't have them in stock at the local Sam's Club. And they didn't have them, you know, I tried to order a pack online. They didn't have them online either. So, I've got a red can, but they just didn't have any red monsters. The powers that be trying to take me out of drinking red monsters and getting down days in the market. So, looking at SPY, I make these predictions at the end of the show, if you didn't know. We kind of predict the range that's based on options flows, where I expect SPY and QQQ to hang out. And I kind of try to make a guess where we might pin for the day. Yesterday, we didn't get, we came up to the upper end of the range and just kind of sat there all day. It was pretty nice. And QQQ, kind of the same thing. We popped up and just sat there. But now today, so we're breaking out and running higher. That was kind of what I expected. We do the bounce, reverse, break through these highs, and then push higher. And we'll come back and talk more about that toward the end of the show as we pull up the gamma levels. You may be like, what the fudge are gamma levels? And it all has to do with bullflow.io. Pull this up real quick. There's levels of gamma. It's where the options are played in the market. Both you have by expiration date and you have by price level. And a lot of, traditionally people have looked at it this way, but I bought I bought a subscription to Bullflow because of this thing right here called the heat map. It breaks it down and kind of shows you, I feel like it shows you more a map of where price might go. And this right here, yesterday and now today, the first time we've had a bubble, like a nice big bubble of gamma on Qs in a while. But there's a caveat here, an asterisk, if you will. It's only 9:40 in the morning. Amateur hour lasts till basically 10:30. So this doesn't actually firm up and really tell me much till we get closer to 10:30. And that's why I do it at the end of the show. So we'll come back to this in a little bit toward the end of the show, and I'll give you my predictions for the day. So let that firm up, let some let some craziness digest through the market. And while we're doing that, we can look at the S&P 500 action overnight, pushing out through this resistance we've had going for a week or two. Nice. I drew that if we can, drew this arrow on the charts a few days ago. If we could get through this level here, we could probably push it right on up here, back in the 7,000 area, where old President Trump was bragging about it being last night during his speech. Looking at NASDAQ, this thing, a bit more nasty here. We've been riding the roadmap line for a couple weeks. Been riding this daily roadmap line. Now, S&P 500 didn't hit it. We still have this potential. Even if we pop up here, we can come right back down here. NASDAQ, riding dirty on this roadmap line. We haven't made a higher high since back here in October. Wow. So if you felt like big tech has just been sucking since October, since Halloween, you wouldn't be wrong. This has kind of been in this, and it actually started early October. We've just been stuck chopping in a range, not really doing dilly squat. We could definitely see a little bit more downside to this. None of these candles here, none of these dips look like we're done on a correction. So even if we pulled this up back near the highs, we could still get a nice big fat flush out. That kind of sits with Nvidia, making that little pop and then a drop, right? This kind of all fits together as a narrative. Now, yesterday I was kind of talking about there's epic levels of puts played in the market, and we were seeing that really ramp up last week into this week. I just didn't think we could drop with that many put players. So we're probably going to rally through the end of the month, possibly, and then rip everybody next month. That's what it's starting to look like to me. Russell here, saving the breakdown. I mentioned that this might be a fake out. We were in this like watermelon seed squeeze, choppy triangle thing. Very common. We see it try to break out one way and then reverse and go the other way. 3,100 is the ideal target on that. If we go on higher, we're not there yet. We're not breaking above the downtrend of highs. So keep an eye out. This could be a double fake out, and we actually flush on down. That support down around 2,500, possibly as low as 2,400 right now on Russell. Oil, so far, fake breakout. Everybody thought we were going to go blast Iran, flew a bunch of hardware over there. They're probably going to wait till the next new moon, sometime in March, before we attack Iran. We like to do operations. Military people, you can comment if I'm wrong here, but we like to do military operations, especially in the Middle East, when there's no moon. So we just had a kind of a new moon. We didn't do any attack, so we may wait out here in March when we get the next one. So 4 weeks. So be careful. This oil could pull back till that rhetoric ramps back up again. GC, that's the thing that nobody thinks about. Oh, look at all the hardware, but typically we like to wait till there's no moonlight. ABC correction coming up into another little potential pop. That resistance level right up here around 5,400 on GC. That's gold. And then we may take a spill A, B, C right down in here. Correct that baby out. I think we still got another flush sitting in gold, another flush sitting in silver. Be careful out there. These are both looking like a corrective move up off the lows. Resistance for silver right up around, say, 95 to 105. Hop up in there, and then we can take another spill down. That could put us down in the 50s pretty quickly on silver. Bitcoin. As I mentioned yesterday, a lot like Russell. Watermelon seed squeeze. Fake breakdown. Suck people in bearish and then rip them back the other way. Target right up here right now around 78,000 for Bitcoin. That'd be pretty sweet. Nice little pop. I've been selling daily puts, or three times a week puts on IBIT. Sold the 3550s yesterday. For today, probably roll that out to maybe a 3650 for Friday here in a little bit. Ethereum, same kind of situation, but we got darn close to breaking down to a new low. So a little bit different story going on here. Barely holding on to a higher low. But this can come popping up here too with a big A, B, C right in there. Dollar, not really moving today. Red days in the dollar tend to be good days for gold and silver, oil. Green days on the dollar tend to be red days for gold, silver, and oil. It's not really more correlated than that. It's not like a percentage-wise thing. It just kind of candle color tells you kind of the bias for the day for the underlying. I mean, for the, correlated. And this has resistance right up here at the roadmap line. And it has a downward bias. This is a bearish chart. Short dollar has been it was probably the biggest big money trade of last year. And we're nearing the point where this is complete, and we'll probably see some upside, and that upside can be pretty massively huge and just wreck the weak dollar narrative. We may have the strongest dollar we've seen in almost my entire life. Maybe my entire life. We may go higher than we were in the 80s. Shock everybody. NKD, look into some global liquidity, pushing higher. This is starting to get into extreme danger of reversal territory here. It's kind of the highest I thought we would pop. It's right up here at 61, almost 62,000. We start above that, there's another level, but it's on pretty massively bit higher here. Up at 74, 73, 75,000 area. Not really expecting to get there before doing another big retrace. And big retraces in the Nike tend to spill over into the US markets. So be careful. If we pop this area, a retrace back to the roadmap line would be kind of expected. Apple dumpling, what's crack-a-lackin'? Checking in with the Mag 7s. Set for 295. Nothing changed there. Amazon, this looks like we're starting to firm up the bottom here. We have a double gap down we're going to have to get through to confirm that this is in place. Maybe back test the roadmap line from the top. That'd be really nice. I made a play for just expecting this to return to the high, but if we can really get rock and rolling here, that's a nice setup to come up into the 300 to 400 area on Amazon. Google, be cautious here. This looks like, to me, that was the first move down in an absolutely beautiful correction. We can see it spike up in that zone and then do another flush right down in here, retest the roadmap line, and then we'd be able to go higher. If we could break out of this little resistance zone where the pink is, the upside would be 385, 375, 385 on Google. Meta has this series of higher lows. We hit this ideal retrace back here in November. ABC, absolutely beautiful correction, right down to an ideal support. This sets up the potential for 1100 to 1300 on the upside. And we're nesting up these 1, 2, 1, 2, 1, 2 possible. And then once we get to 3, it's going to be like a rip your face off rally in Meta. But this could take a little while. It could take a couple of years to get up there. So Microsoft still hunting a bottom here. I'm not confident we're going to hold. We've stepped right down to the limits here. If we can hold this, roadmap line up here at 460, get above that, can set the stage for going higher. This is done like Meta, except it went deeper, got a little nastier on this retrace. Kind of wrecked the proportions a little bit on this correction. Really extended the C wave here. And we made the first move down, the retrace, and then really extended the C wave and pushed the limit. But if that works, if we can actually get back up with the roadmap line, we'll be looking up 670, 800 area right up here on Microsoft. But so far, it hasn't shown any sign that we're going to hold that bottom. Nvidia, we already started there. Tesla, holding on to this roadmap line with dear life, and for dear life. We can actually manage to break out, quit making lower highs. This thing can get going up quite viciously. We could be up in the 515, 530, 540, even 600 level. That white monster get me there. That'd be where I expect to go. People ask me if I'm closing out any TSLL. Nope. Just sitting on it. I have 20 strike calls sold on almost the entire batch. 20 strikes right there, which would be, what was that, 30% higher? And right now, I realistically expect this to pop to 25. On the rally up to 550 or so on Tesla. If things got spicy though, we went on up to 600 plus. This would probably come on up here. 36, maybe even up to 50. And another interesting thing on Tesla, that's TSLL. It's a 2x leverage on Tesla. I've been playing options on it since September. And I've got a boatload of shares, probably 5,000 shares of TSLL. Now, This is my wild speculatory vision right here. We put out an article in my name about this because I've talked about it a little bit. What if we spike this right up here, 6, possibly even 700, get everybody really hyped up on Tesla, make that all-time high, and then we do another giant pullback, possibly back down 200. Yeah, right now, sitting here at 400. Sitting here at 400. Tesla is basically equal to SpaceX in market cap. Right? They're kind of equal, sitting right here at this 400 area. So if we go ripping off up here in 600, that's 50% more. But if that results in a pullback down here to say 200, all of a sudden Tesla is half the value of SpaceX. All of a sudden SpaceX is the more valuable company if we did that. If SpaceX's value keeps increasing in the meantime, and in between time, between doing this and this, what if SpaceX does a leveraged buyout of Tesla and absorbs it instead of going public on its own? Just throwing that out there. What if? And what if that happens later in the year? Like this pop could happen pretty quickly. We could do this next couple months, and then you're like, well, you know, giant pullbacks. We've done a giant pullback several times. I mean, look at this. Did one here, did one here. I mean, giant pullbacks are a thing. We could easily do another giant pullback, come back down in this 200 area. That's where we've found home for years. So just be careful out there. Netflix still messing around here. Back up to retest this breakdown level. Possible this is complete if we break through this downtrend of highs. Roadmap line, next stop. I've been expecting this to dip down into this 60 to 70 area, but if we break up back up through here, kind of changes the expectation a little bit. Roadmap line, it's actually up here around closer to 100 right now. We could also kick off a 618 retrace. This has just kind of been down, 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 down. And this little ABC started out nice, but then we broke on down. And now the proportions just look all messed up there. It doesn't look like that's what it was. This is looking more like this was a whole first move down. We could climb back up to that 618 level right around 107 and then embark on a second move down. So I'd watch out if we get up in that 100, 110 area on Netflix. Now I go pull gainers, things moving up $2 more, put it on the gainers list. I pull a list of things moving down $2 more, put it on the decliners list. This list is not actually accurate, so we're going to refresh because AXON was at the top of the list. There we are. Is it done? I don't know. That's still a downtrend here on AXON. Korea jumping back up on the list. Hey, you don't have a piece of this, you're late to the party. We're hitting the target on EWI, KORU. So this is like danger for a pullback in Korea. Memory, Samsung, SK Hynix. This was the play. This has been the play since it broke out back here at 100 or 70 on EWI. KORU was breaking out at 100 back here. It was the play. You'd be up like 6x if you had jumped on it back here. But now's the time to be very careful. protect your profits. A pullback in Korea can be vicious to this 3x leverage right here. 10% pullback can be a 30% pullback here. 20% pullback can be a 60% pullback here. So be careful. ASML, rock and roll. Next target up there is that 1650 level. ALB, ooh, if we can break out of here, that back tested the breakout of the consolidation there from back in 24. Sets the stage for 600 to 1,000 on the target here. Beautiful potential. There's one. Load up at 200. Cash it out at 800 to 1,000. That's 4 to 5x. Pretty nice. Light. That thing just keeps being crazy. I'd be careful on that one. PPLT. Watch for this to come back to the roadmap line. Doesn't have to, but I think we're going to see this come back down. PALL, I feel like, is the bigger opportunity here. If this one can bounce off the roadmap line, we can see this go up in a big way. Could rally from 137 to like 364, maybe 400 up here. That's the bigger opportunity, I feel like. AMAT, reaching for the stars, 400. WDC, not slowing down yet. Kava, it's a nice turnaround potential here. This can get going. I have a target up here around 250. CMG, not really turning the bottom yet. So Kava and CMG kind of been flying in formation, but this one a little bit down. What Kava is popping here. Leaving CMG in the dust here. We need to see CMG break through this roadmap line and do some positive stuff. Support right now is right down in here. And we're just above that support. I want to see that hold and break back up through. TER. This keeps ripping higher. Be careful on these. When the music stops, if you don't have a chair, you don't have your profit booked or protected, it can rip pretty violently. The most obvious one to talk about right now is this one. It was reaching for the stars, and then all of a sudden, and now we're doing a retrace, and we have the potential to come down here with the absolutely beautiful correction. Probably got to take PPLT and PALL down with it, other precious metals, and then once we make that bottom, then we can start rallying again. So be careful in metals. Be careful in miners. Be careful, be careful, be careful, be careful. I don't think the ripping is done yet. AVGO has potential to have bottomed right back here. If we break back above that 618 level, upside 430, 445. Oracle, I don't think we're done yet on the downside. Probably coming on down to the prior low from April last year. Coherent. 313 next upside. Tech. Watch for this prior high right here. Back in 2011, we made this high. We're back in that vicinity. If we get through it, 82 would be the upside here on tech. EDC. It's a downtrend. I'd be careful till we can break above. It's got reverse splits. Regular split, reverse split, reverse split, regular split. These guys are bad at managing stock price. That's a 3x. Oh, that's why. It's a 3x leverage on emerging markets. EEM. Yeah, I'd be careful chasing EEM with a 3x leverage. Look at that. Long term, that doesn't really go anywhere. Yeah, so that's not a company. That's just an ETF. ETFs can reverse split and it doesn't mean anything. Be careful. The next leg down is going to be vicious on silver. Q. No roadmap line. New listing Be careful. This could be the lowest low. This could be nearing 5 up complete. Yep. So proportions here would be for 5 up to be complete. If we do the retrace, that can pull it right back down here before we go higher again. Looks like this is starting to be played out on that bounce. That's a 4-hour bounce. Watch out for the roadmap line back down here around 99. AVGO. No sign of a low in place yet. May need to dip down below 220. Hood. I think we've got the bottom. We're building the bottom, or we've got the bottom in place. We may need one more dip and rip. Roadmap line, upside resistance. I've been selling puts here at, 67, 68, 69, 70, 71. This whole area down here, I've been selling puts. If I get put, the upside potential is pretty nice on this one. 170, and if things get really extra crispy spicy, 300 up here on the next move. It's just the same pullback we've done a few times. Did it once, we did it twice, we're doing it a third time. The same move we've made up once, twice, 3 times. If this would be the 4th time we make the same move up, we'd be right up here in the 300 area. But we've got to get the reversal to go. So that's one I'm interested in. Potentially bullish. I was bearish on it for a while, since back in October, but now we're at a support zone. Looking for that to hold and go. Making some money on it right now while it just kind of churns. Cloudflare. Bottom may not be done yet. CCJ. Watch for the pullback. Humana. Doesn't seem to have a bottom in place yet. Be careful. UNH still holding this potential bounce. Got to break through the roadmap line. Got to break back above new highs in this pattern. See, this is the low. So when I talk about new highs, I'm talking about new highs since making this low back here last summer. We made the move up, made the retrace, nice 3-wave ABC, holding that 618, break back through the roadmap line, back through the prior high, sets up the potential right up in here. Let's look for something else. Melly. Oh, be careful when they're not done on the downside. Yikes. For solar, taking a step back. I wanted to see that hold, get a little lower. This may be coming down to 164. And Canadian solar, this one's holding up really well. I expect this to pop up here in the 35 to 40 area. Workday is down to the target. This could be done. That could be the end of the drop on Workday. DEO. Probably pushing on down. What Doc U's doing. Still needs to revisit these lows back here. Lows. Retesting we had this downtrend of highs. Retesting it here. We hold it and turn higher. 300 to the next upside on lows. Lunar has upside of 30. STZ not looking too strong. Hadn't been able to get some upside. This could be a big measured bounce. If it plays out, could be pretty big on the upside. At least a double, if not a triple. And screwing around right here and breaking down lower wrecks that pattern though. Fox. It looks like he got punched in the face. Look for support right at the consolidation right here. Probably going to reach back down there. 44. CRDO. No bottom in place yet. Stuff set up for a bounce today. These are actually my roadmap bounce pattern. Trend. Pullback. Bounce off the roadmap line. Continue. These are set up for that here today. Here's the high, here's the low. Entry, 44. Target, statistics no good. So 75% chance and profit factor 1.2. AUTL, this one has a downtrend. I'm not too keen on getting these on downtrends, but the statistics say that it doesn't matter. But it's just against the whole setup, like with the downtrend of the roadmap line. There's the entry, $2 target. This is low price stuff. I wouldn't trade it because the stop is 30 cents. Always $1 below the low. And when the low is $1.30, that means the stop out is 30 cents. I probably wouldn't touch that. Beam. Now this one's been really, look at that, really consistent off this low back here. Entry, target, entry, target, entry. What do you expect? Target. So here's the high, here's the low, there's the entry, 38.40 target, stop is $1 below the low. Crisp. So this picked up this little baby iteration here, target 63.80, and that plays out in the sideways chop that I expected this to do. So no reason not to do it, really. It's not attractive to me. I like to go after the best of the best of the best stuff, and that would not be one of them right now. EXEL, there's the high, there's the low, there's the entry, 48.36 targets, and just a real average trade. PNR, a little bit of a downtrend sideways on the roadmap line. Here's the high, here's the low, entry there, 111.42. It doesn't have to make a higher high to get that either, so reasonable. 48.81 negative profit factor would keep me out of that, though. This does have statistical significance. It does tend to do the trend pullback continuation pattern, but when it fails, it tends to cost you money. Cost you more than the gainers make you. So be careful there. Riot popping on. Now, this is an interesting pattern here. Riot getting more into the AI data center stuff, less into the crypto mining, kicking off the pattern. 2041 target. Not too shabby right there. Nice upside potential. I might actually play something on that. I have to think about it. That's kind of interesting. Riot owes me some money. And another, going back bigger, why it kind of interests me. See this downtrend of highs? We popped out, back tested it twice, holding on to it. Now we're setting up for potential breakout. That's interesting. That can lead to a big upside move, much bigger than this target right here in the 22 area. 20, 22. Wolf. I think people get this one confused with WULF. I wouldn't touch it. Not enough candles to have a roadmap line since they redid the, they basically cashed in all the existing shares and reissued new shares, and I wouldn't touch it. XENE. Last one worked out pretty good here. Here's the high, here's the low. I missed that entry right there. Pulling back a little bit, but target right there, 47.50. Stop is $1 below the low, down at 38, and no statistical significance to the numbers at the bottom. So jumping in the expectation for the day, for those of you that's still hanging with me, thanks for hanging out. Let's take a look at SPY, QQQ, read the pixel dust, read the fairy dust, see if it can tell us anything about where we expect SPY and QQQ to end up today. Type it in, bring up the gamma levels, pull it up on the bull flow. Oh man, look at that bubble. That is the cleanest looking bubble we've had in a long time. And look at that. I mentioned that we may, like a moth to a flame, go hang out with that level. Now look at what's interesting here. Look at this bubble forming for Friday. So this party may continue. We leave that in the dust right there. It's actually more puts on that, so that'd be interesting. Could be flowing on up to like 700 by Friday. So we've got a level, looks like 687 on the downside, 697 on the upside. Draw that in here, 687. $6.97. Pretty darn close. And then for the blue level, like where do I expect it to hang out? So do the best I can here. It's not, this is more art than science. Just kind of pick the balance level. Like now, historical thinking is the max pain is where the biggest level of calls and puts are, but I like to look at it like here's all the calls. Where's the average call? Kind of right in here. It's kind of a bell curve, but not really. And then the puts look more like an exponential curve with a very sharp drop off. Very, big fat long tail. So somewhere around that 687, 689. Looks like where you balance out the calls and the puts. I'm going to go 689. And that's just below where we are. I don't know if it'll hang out there. It may end up here. But 689 looks like the place where we screw the most calls and puts. Now, the problem with this, though, is that the big chunk of puts is actually out here on Friday, not today. So that kind of skews it a little bit. Now, that's what I expect on SPY. QQQ. I play in NASDAQ for my beer money trade more than I do in the SPY. So Q's kind of interest me a little more. Jumping in here and looking at the levels. God, sloppy. Got an overlap. We haven't really seen that happen in a while. So somewhere around 613 looks like on the levels for Qs. And then the bubble itself, let's see how well we're doing on a bubble. Like I said, we haven't had a bubble very firm for a couple weeks, almost a month. And this is looking really nice. Looks like 621 on the upside and 609 on the downside. There's expanded bubble a day. 621 and 609. And we're kind of right in the middle, so it kind of fits. Fits, it ships. So that'd be the playground for the day would be in here. If we kind of pin, the pinning works better on Fridays than it does any other day of the week, but kind of have to watch these levels to see where the big ones develop. We don't have any big billion-dollar levels right now, but this does indicate we have some up pressure going into Friday because the bubble's starting to form for Friday right up here. We had a big level. Yeah, we still have a big level down here. That's in the puts. We could screw that level pretty easy just by climbing higher into Friday. So that's what we got cooking. Be careful out there. The account you say may be your own. And I'll be on live with Jack at 11:30.